Hello, good afternoon, and it's not really that great an afternoon if you are a bull today, but that's the global factors at play. Can't really blame anything back home because it's purely the moves that we are seeing across the globe which is playing a bit of a spoil sport. You do have the Asian futures which was started with a cut of almost 2%, the Asian markets that is. So your DAX, your CAC, FTSE, they're all down anywhere between 2 to 2.5%, and that's of course the rub-off impact that we have seen in the US futures for now, as well as the Asian numbers coming in. For US futures specifically, we do have Nasdaq which is still down 4%. Remember, at one point of time it was down 6%. So at least there has been a bit of a recovery from the lows as far as the future is concerned. Dow futures down 1.5%, S&P futures down 2.5%. So there is that bout of pressure coming in. What's actually holding okay is the Indian markets in the context of at least what's happening across the globe. And volatility has taken a bit of a spike, right? In Japan, it was up almost 140%. The SIBO OE VIX was showing a gain of over 100%. And the India VIX too managed to show the biggest intraday jump that we have ever seen. It was up 58% at one point of time. And that is telling you the kind of fear which has creeped into the market. But the big question is how much of this fear is warranted and how much is not. Because if you look at the fundamentals, nothing changed in a day. Not that earnings have suddenly crashed in Indian markets.
Let's talk about the first part of it. Is it warranted? Yes, it is warranted because there was a very sharp rally. And if you look at the change in narrative on the growth front, purely on the US market, it is definitely comes as a surprise. Okay. US market was, you saw the GDP numbers in US, strong numbers.
Strong numbers.
Correct.
Yeah, so suddenly the recession fear is coming in.
Yeah, so there's a departure, there's a delta in the actual reported numbers and what the street now factors in. The economic data, macro data, jobless claims, all of that is indicated. There's a change. And when you are looking at a very sharp rally in the last 2 years, some of that fear is getting factored in. Same is the case with Japan. If you look at the Japanese market, there were only 3 markets which are rallying globally. US, Japan and us.
Correct.
But if you see, Japanese market was not rallying because the earnings upgrades or earnings is actually, there was a trade, 40-year kind of trade reversing there. But our rally, if you look at the market in the last 4 years, Gautam Dugard has put out a very good piece of research earlier that the numbers, the earnings growth has been 25% for the broader market. So if they are up 27, 28% 4-year CAGR, what's wrong in it? Question is now, because if global growth gets challenged, will it cast a shadow on India growth? Last 2 readings are above 8%. Are we going towards in that direction, 7.5, 8, or some, because there are 4 or 5 upgrades to India growth. IMF had done it, so many other agencies, Moody's had done. Is there a shadow or doubt on that growth? If not, and also the delta in earnings. But there is no major, kind of issue as far as the Indian economy is concerned. But it is very good. The regulators' work is getting done. AMFI's work is getting done. North Block is now will be heaving a sigh of relief. The froth is out. Maybe another 4-5%. Anshul Sehgal has been doing it for a living for a very long time, is now joining us to talk more. Anshul, whatever said and done, is it a godsend opportunity? Because otherwise, the trading community, the investing community would have pointed fingers at here and there. But now it is a global correction which is doing the needful here in India. So it's all par on course, isn't it?
Hi, Ajay. Good afternoon. Pleasure to be with you. It is a godsend opportunity on 2 counts. One, if you're holding cash, then clearly this is a time to start deploying, nibbling at the margins. Second, if you're not holding cash and to some extent you're holding questionable stocks, then with this correction, even the quality names have corrected. So you may want to improve the quality of your portfolio and shift some monies away from weaker names to stronger names. And so clearly, there is no doubt in my mind that corrections are to be cheered. They are not times when one should be sulking. Particularly when you have made so much money over the last 3-4 years. Just the last 2 years, if you see, the small cap index itself is up about 70-75%. And if you were in half quality names in this period, then your stocks would be up 3-4 times. Having made so much money, giving some away and waiting for better times to return after the correction eases. is what a seasoned investor should seek. And I think that this time should be cheered.
Andrew Ferris is also joining us. Andrew, for a moment, I'll go back to that issue of global growth. If US growth indeed looks challenging, can it cast a kind of a shadow on overall global growth? And hence, emerging market investors like India should also be a bit worried. Andrew? Okay. Andrew got disconnected. We'll come back to Andrew in a minute. But you were raising that point, Anshul, a very good one. In the last 2 months, as I do kind of travel around the country, bulk of the big HNI, ultra HNI had, out of caution or, willingly, out of experience, had raised a lot of money on the side, 20%, 30%, and were not comfortable deploying fresh capital. Will this cut which is coming in, and if it lasts another week or so, will it drag those investors back to markets? That cash will keep a fall cushioned here?
HNIs, by virtue of them seeking absolute returns, are not worried if they let go of a percent of upside here and there. And they're more concerned about capital protection, hence they hold cash on the sidelines when markets are stretched. And they will be in no hurry to deploy it en masse in the markets because of this shallow correction. But the story is quite different with fund managers and asset management firms. As you may be aware, Ajay, in the last 6 months, we've seen many of these asset management firms accumulate cash. In fact, the aggregate cash holding in the system is roughly 1,25,000 crores at this time. And we are adding 20,000 crores on a monthly basis to this kitty. Now, given this setup and also their pressures on performance, it will be this cohort which will be looking to deploy capital in the markets. And also, this is the more significant capital. And I'm not even talking about the alternate assets class, which is PMSs and AIFs, where again, the amount of cash that they're holding is added to this amount. So the cash sitting on the sidelines is quite substantial, and this is cash which has pressures on performance. And it will be this cash which will be coming in to deploy. HNIs, of course, they will be deploying, but they will be deploying on an opportunistic basis. Stocks which they have been tracking, where they see deep cuts and where prices have reached where they think it's lucrative to deploy capital, it is there that they will be going in and investing. En masse investments, unlikely.
Okay, so that's the view coming in as far as the market mood and market setup is concerned. Yes, of late we have all been used to, one side move on the markets, at least in the last 3 to 4 years, and even giving up 4-5% seems like a very, scary task at the moment. But that's how the cycles have always played out. So that was perhaps par for the course. But you know what is holding out okay is clearly the FMCG pack. So at Dabur, Marico, which just reported its numbers, the volume growth came in at around 4%, in line with expectation. The commentary is quite good, it's something which is holding out in the green. Britannia, even though it was, softish kind of number, there was at least nothing way too negative in the number, so that's holding up quite okay. HUL is doing well. Nestle, etc. are the other factors. Kunal, is this the place to hide right now? Britannia, HUL, Nestle, Tata Consumer, these are your top 4 out of the 5 on the Nifty.
Yes, on a relative basis, you may protect your capital over here, but then whether you're looking at incremental returns in case if the market gets into recovery, I think that could be questionable because, if the pace of correction has been on the sharper side, assumingly, say in the next 1 week or in the next 4-5 days, assuming if the global setup, just about tends to be a bit more stable, I would probably believe that, the high beta spaces could probably make a very strong comeback. So I think what we need to now look out for is, for example, sectors like autos. If you have stocks like Tata Motors, which is almost at 1200 just about last week, it's come back towards 1000, 70, 80 mark. I think that would be a very good point to try and look at a contra buy over here. Maybe Bajaj Auto could be something of a similar stock in that similar category in terms of a stock which is buying on dips. So yeah, FMCG can protect you in terms of the sharp sell-off, but then if and when the market gets into a recovery phase, I believe that the recovery and the performance could be much more better in the other sectors.
You said if and when there's a recovery.
If
Not
and when
really
there is
when. As in, is there really a if question right now on recovery?
No, I think it's a matter of time. That's what I said. It's a matter of time. See,
So, but
whether
are
it's
you
tomorrow,
expecting the consolidation or the sideways move to be a lot more protracted right now, or do you expect it that this is perhaps just a 1 week or a short-term bout that we are seeing of sell-off?
see, generally sharp corrections are generally met with sharp rallies whenever the market bottoms out. If
Is
it's
this a sharp correction?
it's a
Or
start
is
of
it gradualish kind of a...
no, I think this is a sharp correction.
Okay,
So I think whenever the news settles out,
Okay.
I think the correction may not be just
But
stable.
what does the reading show? Nifty, Bank Nifty, where do you see the...
I'll give you a very strong seasonality picture. So last 24 years, the data is in an even year. And we're talking of the years in 2008, 2020, and we know what events transpired. The Nifty has never given negative returns in the month of August.
Oh,
As a
interesting. So we
seasonality
are in the
factor.
month of August.
Yes.
So would you recommend start buying now or maybe a day or two?
So that's what I said. You start buying in phases.
Stagnated, okay.
Yeah, but as I said, that the recovery may not be very slow, gradual. It will be V-shaped whenever the market finds a bottom.
Okay, we'll take a short break on that note. Much more to discuss on the markets on the other side. Don't worry. All right, so while we are talking about not to be panicking in this market, look at the advanced decline. A lot of stocks actually have rebound from the lows and have started trading higher back into the green. Can you pull up the advanced decline? 230, so 1:10 roughly right now. Look at the mid-cap stocks. A lot of mid-cap, small-cap has started coming back. One stock I want to discuss with you, Anshul, is Indigo. You would be surprised to know that today Indigo management made a very detailed presentation. Along with Mr. Bhatia, Rahul Bhatia himself interacted with my colleagues, and a lot of positive commentary coming in. But one which caught my attention was they would be looking at adding one new aircraft every fortnight or every week or something like that. Very positive. Let's play a slice of that conversation, and then I'd like to know your thoughts on either Interglobe. Not ready. Okay, we'll come back. Would you play a Interglobe right now, or maybe some of these airport companies? What are your thoughts there, Anshul?
This is a space, Ajay, where that is travel inbound or within the country, where I see that sky is the limit. Given that given the positioning in India, which is that we've got such a diverse country, and also the supply is far lower than the demand. Actually, sky is the limit here. Particularly in airlines, this is a business, and I've said this in the past also. Essentially, businesses where you have low margins and where efficiency requires you to, or efficiency requirements are quite stringent. In such businesses, you see monopolies get built because the efficient players, which are a handful, they always take the markets. You look at retail, you look at steel pipes, you look at airlines, similar sort of setup, and here again, there is one player which is really taking the lion's share in market share in the industry. Now, is that likely to change? I don't think so. At least as the setting stands today, it doesn't look like. And if the demand patterns are where they are, then this company or the leader in this space will continue to get stronger. One anecdote I'll tell you about this company, which probably you may also not know. They sell more food items on their airlines than the largest QSR in the country. That is how big their food business is for this company. And there again, they don't have any pricing sort of caps, etc. Unlike on the seats, in food and other items, they really don't have any price caps. So this company is run very efficiently. They run like a very efficient ship. They have similar sort of aircrafts which they run, which is why the cost on this business is far lower for them as compared to some of the competing airlines. So I'm positive on the space in general, and I think the leader will become even stronger. They will gain, at least retain the market share, or if not gain, in the coming few years.
Okay, so that's the view coming in. But since we're talking about Indigo, let's hear out the management as to what they had to tell the analysts as well as media in their meeting today.
We have embarked on the journey to go more international and I shared with you the recent expansions which we did on our international network. And as recent as earlier this week, we have announced Jaffna as our 34th international destination, number 34. It's going to be our first ATR international destination. And let me announce here today that before this financial year is over, we'll be adding another 7 international destinations, bringing the total to over 40 international stations. Between today and the end of the decade, we will double. And I showed earlier that 500 plane order will take us well into the middle of the next decade. So if you just think about it, some other airlines talk about it, but for us it's reality because the orders are there. 8 plane, 8 week for the next docile. That's what we're doing.
Okay, so that's the plan that they have for the next 10 years. As far as Indigo is concerned, they're of course launching the business class as well. And the street wants to know more about how they're looking at managing the profitability despite all the efforts that they are making. In terms of the market mood right now, well, we have seen a bit of a dip. I'm just looking at BSE stats right now. Almost 3,400 stocks out of the 4,100 are declining. So advanced decline ratio clearly is tilted completely in favor of declines right now. 577 stocks are locked in lower circuit. And if you look at the overall capitalization loss that had happened, at peak we were down almost 16 to 17 lakh crore in terms of market capitalization. It's narrowed a bit. We are looking at a cut of just around 13-14 lakh at the moment, but still quite a bit of pressure on the markets. In terms of individual movers, which are the outperformers? Well, you have Glenmark Life, which is actually 6% higher. Cera Sanitaryware is doing quite okay. I think it's one of those result candidates. Marico, of course, Devyani, which also reported its numbers, and HUL. These are some of the stocks which are holding up in the green right now. Vinay Rajani is also with us on the show. Vinay, what's the best strategy right now to deal with the market volatility? What's the top recommended trade?
Yeah, so in last 3 sessions, we have seen that Nifty has almost corrected by 5%. And if you go by the points, almost 1200 points correction in last 3 trading sessions. Definitely global market setup was weak. And because of that, the market has seen a momentum selling in today's session. So if you were to look at the overall scenario, it still looks weak. There could be some sort of pullback. So 200-300 points pullback in the Nifty cannot be ruled out. But if you were to look at the overall setup, it still looks like that the positional trend should remain bearish. The support which I see for the Nifty is around 23,600, which happens to be the 38.2% retracement of the entire rise that we witnessed from the 4th June low towards the new all-time high, which was 25,078. So after election result, whatever recovery we have seen, if we were to take 38.2% retracement, it comes at 23,600. Up to that level, I'm expecting this correction to continue on the downside. So that is my first target as far as short positions are concerned. There could be a pullback, as I said, in intraday or tomorrow morning, but I think these pullbacks should be utilized to exit long positions and create short positions. So overall, I'm looking for sell on rallies kind of opportunities. And ultimately on the downside, I'm expecting a target of 23,600 immediately. So overall setup of the market looks weak and our trend should remain down only.
Anshul, have you looked at some of these RPG group companies? Recently they had an analyst day, Philips Carbon, many others, CESC and others. Any of the businesses do you find value in?
Ajay, over the years, I've looked at these companies, but I don't look at them very closely. There are some companies within the group where I do anticipate that there is going to be value addition, which is that from lower value-added products, they're going to go into higher value-added products, which will be margin accretive. But how much of that is already in the price, I'm not aware because I don't look at them very closely. I've been, in this group, I've been in the past invested, but not anymore. So pardon me for not knowing enough about this space.
Okay, point taken. Not a worry, but yes, these stocks have seen quite a bit of interest of late, so maybe they'll come back on your radar as well. Thanks, Anshul, for making time and speaking with us. It's been a bit of a tricky day for the bulls, but nonetheless, at least we are holding on to that 24,000 mark. Time now to take the closing trades. Kunal, what's the closing trade that you would like to punch in right now?
Well, that'll be from the insurance pack. HDFC Life is something which is looking attractive at current levels of 700, and so far I think insurance has been a better performing sector over the last 2 months or so. So I think at 700, HDFC Life is something which I would recommend.
Okay, HDFC Life. Vinay, what about your closing trade idea?
Yeah, so I would like to go one short and one long. The one short is there in the ICICI Bank, so it has not fallen that much and relatively done well till now. But overall, if I see there is a bearish structure of head and shoulder pattern on the daily chart, and I see further downside in the ICICI Bank. So in the coming sessions, ICICI Bank can go down. So one can go short in ICICI Bank August future around 1170, 1172. Stop loss can be kept at 1192. On the downside, I'm expecting a target of 1145 for the next couple of sessions. The second pick I would go long is the Astral. So Astral Polytech has given a nice correction, and after that it has reached to a long-term support of 200 days EMA. Today's candlestick pattern is almost like a bullish hammer candlestick pattern. So as I said, for the Nifty, there could be a pullback in the coming time. So if pullback comes, then we need to find some stocks which can bounce back from the support level. So Astral Poly is one of the stock which I like and can give some returns in the short term if market were to support. So Astral can be bought at 2112. Stop loss can be kept at 2060. On the upside, I'm expecting a target of 2185.
Point taken. Those are the top recommendations right now. Time now to head into a very short break. But as we do that, here are the market experts telling you as to how you should wade through this volatility and the bout of sell-off that we are seeing.
Much awaited correction has set in, and which is in a way I feel is good for markets. From a longer term perspective, in a sense, like can it be a deep correction for Indian markets? I would not think so. Because the economic linkages of the Indian markets from a liquidity standpoint of view at this point in time are very low, unlike 2008 crisis, where we had lots of leverage coming from international markets, and any impact would have impact back home. This time around, all those exposures are very, very limited, and sentimentally there could be some impact from a short-term perspective, but I do not see any big structural deep cut in the markets.
From a environment where the base assumption was probably will get one rate cuts in US this year. Now, the base assumptions US markets are pricing in is about 100 basis points of rate cuts and 50 basis points, 100 basis points of rate cut this year and probably 50 basis points going into the next meeting in September itself. So all of that does call for it's a big macro shift from a global perspective, and that would lead to unwinding of some carry trades and some unwinding in emerging markets as well. And because of all of this, I think this could be a proper correction in this bull market. But I still believe that the underlying fundamentals for India remain strong.
Our belief is the easy money is behind us, and markets are incrementally going to be stock specific. The breadth of the market has started to narrow down substantially, and we believe that this is the time where you need to be a risk manager rather than a fund manager.
Welcome back. Well, all the sectors are in the red right now. No surprise there. It's the metal index which is taking it on the chin right now. Almost a 5% cut coming in on the metal index. It's Nalco, SAIL, Hindustan Copper, Hindustan Zinc, Hindalco, which are under pressure. So clearly it's the global facing stocks and sectors which are coming under pressure, and ditto can be said some of the for select name in the auto sector. So you have a Bharat Forge, a Tata Motors, Divya, which have a lot more exposure to the globe, is something which is coming under pressure. Reliance is down 3.5%. Didn't really realize that, but that stock is down or is kind of putting a pressure to the tune of 90 points on the index. Infosys, HDFC Bank, L&T, ICICI Bank. These are some of your other big drags at the index right now. But what about the big price volume buzzers? We do have Ansh joining us for just that. Hi, Ansh.
Hi, so LIC Housing Finance will be the first stock in focus, as the stock has given a breakdown from its head and shoulder chart pattern, hitting 1 month low level. Also, the stock has slipped below its 50-day EMA, indicating bearish sentiment building up in the stock. Also, today's breakdown is backed by a heavy volume of over 4 times its average trading volume of last 20 sessions. Apart from this, Titan will also be in focus, as the stock has given a breakdown from its upward sloping support trend line, where it was hovering above for around 6 to 7 sessions. And if you see the same stock on a weekly time frame, it has formed a bearish bearish engulfing candlestick pattern, which usually indicates a potential reversal in trend on downside. Whereas if we talk about National Aluminium, then the stock was consolidating within a 11 session pattern, and today it has given a breakdown from that pattern, giving a bearish sentiment. Also, the stock has slipped below its 20 DMA level. Lastly, Power Finance will be in focus as the stock has actually given a breakdown from its upward sloping support trend line, which was intact for over a month. So keep an eye on the stocks.
Thanks very much for that. Let's also welcome Gurmeet Chadda in the conversation. Gurmeet, afternoon. Have you started buying already, or you're waiting another 2-3 days, but already initial calls to clients have been made?
I think these days the clients call you, Ajay. I think that's how the evolved market
You have started
is.
receiving calls since morning?
Yeah, actually, since yesterday, because I think the developments really started Friday night. But yeah, we've deployed about 25-30% of the cash we had in the portfolio, plus depending on how much fresh money comes in. My thesis, we don't know in future. Nobody knows what future is. But your past experience tells you that whenever India falls for non-India reasons, in hindsight, that has always been an opportunity. Although this is hardly a correction, falling 4-5% from peak is not a correction, and we haven't seen 10% correction for a long, long time this year. So I think market was looking for reason. I think we've got 2 or 3 right.
Kya baat hai? What a point. Whenever India has fallen for non-India reasons, the falls have been shallow, and you've already started receiving calls from your clients. That's interesting. So where do you see there's a shift of stance? A lot of people are saying domestic oriented capital goods manufacturing is where the money will move out from. It may go towards consumer names which haven't done. Are you also making some similar tilt?
I think you need to have a balanced approach. This is not this versus that. I personally think it's just 1-2 day fall. I think Fed will do some emergency measures. That's my reading. We could see a rate cut much before than what market thought it probably will be September. So broadly, the bond yields have fallen. I think there will be some softening of bond yields, which I think is very positive for the market, especially financials and rate sensitives. So that's one focus area, and that's one segment which has relatively underperformed. FMCG, because of rural recovery and because of delinkage with the global market, some of the FMCG names are still, that's why you need a very balanced portfolio. Today, if you had FMCG and Pharma, your fall would have been much lesser. So it's also important to fall lesser. We sometimes in the bull market we get carried away only by returns, but having a risk-adjusted approach with falling less is also equally important. So I think we'll continue to dip more into especially rural-facing names like ITC, like Imami, like Tata Consumers of the world. I also want to look at some defense names if we get sharp corrections. Unfortunately, we are in a geopolitical environment where I think this will be more, we'll see these more and more often. We've recently seen some news now on Bangladesh coming with so much of internal civil war kind of a situation. I think the Bangladeshi PM has resigned. So I think this is the new truth we have to, reconcile with. Second is any supply chain disruption. I think where India has an edge, like auto ancillary, especially for the IC engine parts, we'll be very, very focused on.
Point taken. So looking out for those hidden gems. But wanted to shift focus away from the secondary market, Gurmeet, and talk about the primary market, because a lot of action there, right from Ola to FirstCry to Unicommerce. Have you looked at any of these companies, and would you recommend subscribe?
We had a look, at the RHP in detail. So if you see, businesses like, EV, obviously it's a pure play. I think the operating leverage will come when they do, 5-6 times of the volumes they are doing right now. What is important here is how much can the local EV ecosystem be developed, right? So if you look at China, for example, the Colt supplies battery. Not only it's the largest battery maker in the world, even Tesla buys CAD battery in China, right? Today, GM has also entered. So how much can we localize the EV ecosystem? I think is what will decide how this will do. They have some plans on, the cell factory they have, increasing it to, certain gigawatts. I think they're at 5. They probably will take it about to 15, 20. And I feel that the traditional guys have more cash flows and war chest to fight this, because if you see number of two-wheelers sold in India, it's about 1.2 crore. The number of electric vehicle is not it's still in single digits, not even cross double digits. So adoption in India has been relatively slower. in my view. So I would be neutral right now, like we were in Zomato. I'm not comparing the two. Once Zomato really started showing cash flows, when Blinkit came in, contribution margin went in, that's when we decided to enter, and we have still made very good returns on that. I think something similar we'll have on Ola. We have a neutral outlook right now. And these businesses you need different lens. You can't evaluate them on PE and traditional metric basis. So we'll wait. And I'm focusing more on the EV ecosystem, including battery swapping, including cell factory. How much can it be localized for us to take a more decisive call?
Okay, so that's the view coming in on Ola and a couple of other primary market participants right now. In terms of the market, it's Motherson Sumi Wiring, which is down 10%. LIC Housing that disappointed with the earnings, even though the management has gone ahead and stuck their neck out with respect to the guidance, because they're maintaining that despite the miss coming in Q1. This is LIC. I'm talking about LIC Housing Finance, because that's the stock which is down 8 to 9% right now. I did see a bit of a recovery from the lows because the management went ahead and maintained the guidance. Thermax is down 8%. CAMS is the other candidate. We did speak with the management earlier in the day about CAMS as well. They were positive about the outlook. Adani Transmission is surprisingly down 8%. Don't know if there is going to be any impact on the transmission business, but maybe they do have some, foreign denominated, debt, etc., which might be putting a bit of a pressure on some of those names as well. Vinay, wanted your take regarding some of these Adani group of companies. Is there any chart that you would like to look at positively?
Yeah, so as you discussed, Adani Energy Solutions. So till yesterday it was looking good, but today somehow it has come down by 8%. The another stock is Adani Wilmar Limited, which is holding very well in today's session. So these stocks happens to be very volatile stocks, and in this kind of markets when volatility and VIX is rising and sentiments are turning weak. So this kind of volatility would be there. I think despite they are showing strength on the chart, still the overall setup of the Adani Group stocks are relatively stronger. But I would suggest not to touch that, because these kind of movements, till yesterday, as I said, Adani Energy Solution was looking good technically, and today it is down. So it might happen because overall support from the market is not there. So I would not suggest unless and until we get some clarity on the market. And as of now, the market trend has turned weak. So better not to touch those stocks as of now. Definitely, the Adani Wilmar is looking stronger on the charts, but I would rather not take a long position in the weak market.
Let's talk about on the downside, the short position. Especially the view is coming that metals could actually see a major down cycle because of globally connected. Anything which looks weak there? The index is already down 5%, but anything which looks weak there, Vinay?
Yeah, so Tata Steel is one of the stock which has broken down below the strong support, which is nothing but the 200 days exponential moving average. But in last 3 sessions, Tata Steel has witnessed a heavy correction. So it might happen that you may get it at higher level. So at higher level, Tata Steel can be looked at for the shorting purpose. So from the recent high of 169, it has come down to 150. So around 155 odd level, one can again get the selling opportunities. Overall, I feel Tata Steel is looking weak. Derivative data also suggesting that Tata Steel witnessed some short build-up in the last week. So overall pattern of the Tata Steel is weak. If it comes down, comes up by 2-3%, around 155, one can look for the shorting opportunities.
That's a view coming in on some of the metal counters. QSR also as a space showed signs of reversal. Would you just buy right now, Gurmeet, or wait for some more time there?
No, I think it's a very interesting theme, and I've had this discussion with Ajay, some time back. You have a Haldiram at 80,000 crore market cap, and you have all listed QSRs less than Haldiram. I think it's 65,000 crore. In fact, I don't think so we have a single large cap in that space. I think a little bit of bottoming has happened. It's been tough 2 quarters for most of these guys, including Westlife. Jubilant has gone through a lot of attrition, a lot of changes, a lot of so I think at there's an inflection point beyond which, the earnings start showing stability and growth. In our basket, you have Mrs. Bector, which is technically not QSR. It is interlinked with the entire supply chain of QSR, one of the suppliers to Westlife and a lot of key brands. And we have Westlife in our portfolio. We are looking at Jubilant in case, valuations become a little more reasonable from these levels. But in general, I think our cooking time as a nation has come down 25%. With nuclear families, I think QSR should do well in my.
When you can spend time in your drawing room, I have, in front of OTT, your favorite OTT, right? Okay, so let's talk about some other areas. I was also looking at the number of residential outlets in our country now reaching a fitments, kind of time zone has also gone up significantly. And someone was telling me, a large builder was telling me that, there are entire blocks of, residential societies which are witnessing work of tiling and, last mile kind of work. Would you look into some of these last mile names, Gurmeet? People who are, providing boards or even, piping or even tiles?
I think it will take probably a quarter or two because the first period you saw existing inventory being sold, which was post-COVID. And we had a series of launches in last 2 years, very successful ones from leading. I think what we are seeing in, especially in Bombay and Delhi, in that region, because real estate, you have to go geography wise, is that corporatization of real estate developers. If you see the top five developers in every zone are largely large corporates, listed players. So in Delhi NCR, the local builders, regional builders have made way to the DLF
Got Gurmeet on a
of the
bit of a
world.
patchy line. Gurmeet, in fact, we'll let you go on that note. Sorry for interjecting. There seems to be some technical issues there. But we do have Amit Mahajan, Director at Paras Defence and Space, joining us on the show right now. Amit, hi. Thanks so much for making time and speaking with us. A good show right now that I'm seeing in terms of your numbers. Revenue up 73%, profitability more than doubled on a year-on-year basis. Is this the kind of run rate that we should expect every year? Because till last year, the revenue growth used to be 10 to 20%. What really changed that you are seeing a growth rate of 73% this quarter?
See, firstly, thank you for having me on the show. It's always a pleasure talking to you guys. The company has been making a transition from a component-based company to a product-centric company. Some of the high-value products that we've been trying to develop were to be slated for delivery last year, and I've been mentioning that they will come, and the time has come. Maybe this will eventually get consolidated. Yes. Now the business and the revenues, also the profitability is likely to streamline. So yes, you can expect a fairly good financial year.
Just to understand now that, I'm looking at your numbers last 2-3 years, the run rate. Now is it right to assume that now you're going towards more of a 400 crore kind of a top line, kind of a company on an annual basis with 30% margins?
You can say that around that figure, yes.
Okay, great. Because that is important, because up till now, one section of the market, though yours is a very admired company, one section of the market thought that it's slightly on the expensive side, looking at your previous year's numbers. But now with 84 crore top line and a 30% market, 10 times sales, 11 times sales. Tell us how next 2-3 years is this transition going to continue momentum? What are they going to be a mix like, the revenue mix?
I will take you back to the first sentence that you said, that sometimes this company was slated to be costly, but this is how defense and space sector is. It is wait and watch. When it comes really good. So the company has always been in this business, has always learned that if you invest time in the development, then the returns in this particular sector or the industry of defense and space are usually very, very handsome. And to our benefit, most of those returns are permanent basis. They are not one-time returns. Because if you develop certain technology and if it's going to go for production, you're a part of the whole cycle at all times, unless you say no to your business, which nobody does. Now, coming back to your question as to in the next couple of years, see, there are the geopolitical situations, the new reforms in defense procurement, all of this are favoring companies like Paras Defense, who are indigenous manufacturers of these technologies. Now, we have been currently also been a part of a lot of development of critical technologies. Now, this allows us to become a part of a program and add more and more value year on year basis. I would want to translate the same thing into my order book and subsequently my revenues. I would give you a very, very conservative guidance of about 25 to 30% year on year, but that should continue.
And thanks, Amit, for making time and speaking with us. So that's Paris Defense. It's actually shot up in an otherwise weak market because the stock was trading at a lower circuit. But since the numbers have been out, we have seen a bit of a reversal. And that's been the nature of the market today as well. Because while the global indices were much under pressure, the Indian markets have been outperforming. And to talk to us about a bit more on that, we do have Aisha and Nikunj on the wall. Aisha, take it away.
Oh yeah, absolutely. Even though we've seen that 7/10 of a recovery coming in for the Nifty, I don't think it can qualify for the kind of buying that you had from either the election outcome day or for that matter the budget day. It's nowhere close to that. It's been a global rout and there is no way of sugarcoating it, right?
So, Aisha, what are the basic questions you go to ask now? Are we likely to fall less or are we likely to fall in line with global markets? If it is a global sell-off, is it just the beginning of a directional trend or this is more like a technical sell-off, garden variety sell-off, 2-3 days it will be over? And third, typically when this kind of a shakeout happens, it leads to sectoral churn. So will there be a sectoral churn? There is something which I've learned in financial markets, it's called recency bias, which is that you look at the recent past and say this is the future, which is the last 2 times markets have corrected on election budget day. If you bought the fall, you benefited. Should you buy the fall? The difference is yes and no both.
But those were local events, right? This is a global rout which is underway and the screen clearly is highlighting the reasons why. Clearly after the jobs data in the US, there have been recessionary concerns, although it seems that there is an emergency Fed meet, so who knows? Maybe it's going to be an out-of-policy rate cut that we may have in the offing, and then of course what emerging markets do is anyone's guess from there. Traditionally, they typically move up whenever the Fed does ease off on rates, and considering this has been such a much awaited event, you never know at that. And also the yen carry trade unwinding, we've seen the kind of fall that the Japanese markets have had almost in a bear territory already. And then of course, one can't negate really what's going on with regards to the geopolitical tensions all across West Asia and as close as, not geopolitical tensions, but unrest definitely in our close neighborhood as well. So the texture of the fall today is very, very different than what a budget or an election day was.
It's global in nature, but globally is it because of an event or is it because of the Humpty Dumpty leverage trades are reversing? I think it's the latter which is at play, because I don't think geopolitical tensions are new or for that matter US economic conditions are new. These are all, markets are reacting to yesterday's story, not tomorrow's fact. So that makes me hopeful that there's a technical sell-off. But where I see both opportunity and threat is the selling in commodities. In the near term, great news because commodity goes down, margin expansion happens. In the near term, commodity goes down, crude and other things, other commodities will come down, you would benefit. So in the short term, India is a commodity producer, consumer, not a producer. So you would benefit and inflation comes down decisively. If this becomes a trend, then it's a problem. So that gives me a little bit of hope. Third, believe it or not, 20,000 crore to hai. 20,000 crore is still going to come on a monthly basis, and that I think is the ammunition on which this market is working. And fourth is that you are still in the best macro spot. Earnings, currency, fiscal deficit, government commitment. So those factors in a sense will not Teflon coat you, but they will give you a backstop sooner than later.
Yeah, but I think the question on everyone's mind would be whether to buy the fall just yet or not. Of course, there would be a couple of trading buys. I mean, what explains the fact that some of the IT stocks, some of the pharma stocks, FMCG names, and even PSUs, and I'm not only talking about PSBs, some of the core PSU names which were considered to be frothy, even they actually have seen a mighty recovery from the session lows. But again, those could be trading moves. Do you go all in right now if you were sitting on cash, I guess is the question that all of us have to answer.
So anything which has got to do with global, even IT, just avoid them. Because if it's a global problem, you don't know where the chain of, what the snowball effect would be. But like I said, that where can I pick a bright spot? Where dim light could become bright light. Like they say, focus on where the puck could move, not where the puck has moved. The dim light is in the agrarian sector. Good monsoons, hopefully a bright light now. The dim light is in FMCG sector because of rural demand and because of high compression in margins. Commodities come down, that becomes a better light for me. And then if markets are indeed in a mood of unwinding, then this becomes the defensive space, not because of the nature of the businesses, because they've underperformed for many years now. So where you actually may see a space to avoid is PSUs. They're Humpty Dumpty, they're bloated. I think for many PSUs, multi-year trends and multi-year tops have been made, so you want to avoid them. FMCG, time-wise correction, price-wise correction, both is at play, and whether it's Colgate or Britannia, they are getting back on the trajectory. So FMCG, yes, especially urban, rural FMCG. Autos, look at local guys. Look at a Maruti instead of Tata Motors. Don't look at Bajaj Auto, which is exports. Look at Hero MotoCorp. Look at, don't look at Motherson Sumi, but look at any auto ancillary company like Tire, which is making local stuff. That's another sector you need to look at. IT, I'm not so sure. Banks, FI selling, that's a problem. Or bacha kya? Yeah, pretty much.
Yeah, that's pretty much it. So, that's the texture, and that really is the messaging, Anisha, for the retail community on whether to buy the fall, what to buy, and if to buy at all or not.
Yeah, that's $1 million question. Do you deploy right now? Do you wait for a bigger correction? But seems like the consensus is perhaps you should start deploying in a staggered manner. But where do you deploy is the big question that you need to answer, looking at the risk and the reward profile that you would like. But just looking at the market texture right now, how are we likely to close? Where we are likely to close off the lowest point of the trading session. But don't, kind of take your eyes away from what's happening across the globe, because the European markets have taken quite a bit of plunge right now. You do have the DAX down 2.5%. French CAC has taken a deeper cut as well, and the pre-market rates in the US have kind of tumbled a bit more. So from 6% cut on Nasdaq, we had reversed to 4%. Now we are down 4.5%. So we're just toying with that cut of anywhere between 4 to 5% when the market does open in the US. So that remains a bit of a worry point right now. Oil has cooled off quite substantially, to be honest, because of the US recession fear. So oil is down to $75 per barrel. Gold continues to hover close to the life high levels. Indian rupee, of course, has weakened, and we were headed towards that 84 mark. So lots ready to track on the markets right now. But what about the BDSE trade, if at all any, that needs to be watched out for? Kunal, any BDSE trade that you would want to take home?
Yeah, I think a couple of high-risk trades over here. The first one would be a one, Philip Carbon. That's a chart which apparently in the last 4-5 days has done exceptionally well. So I think at 380-85 levels, the stock, I would probably anticipate a similar up move over the next couple of days. Buy with a target of 405. Stop loss could be kept at 370. And Jubilant Pharma is something which is looking attractive. The stock forming a pennant formation on the daily charts. So would suggest a target of 885. Stop loss at 815.
Okay, point taken. And if you thought that perhaps the global turmoil was limited to what's happening in West Asia, that's not the case. It seems to have reached the eastern shores close to India, and that's coming in from Bangladesh. Look at the flashes at the bottom of the screen. It has been confirmed by the Bangladesh army now that Sheikh Hasina, the Prime Minister, has resigned as the Prime Minister. There are reports doing around that she has fleed from the country, that is Bangladesh. So we'll have to track the developing story as well. Those are the visuals up for you on the screen of a helicopter perhaps that is, said to be carrying the Bangladesh ex-Prime Minister now, Sheikh Hasina, because there has been a lot of civil, tension as far as the Bangladesh is concerned. And now perhaps it's closer to an end with the Prime Minister fleeing the country at the moment. We are looking in for more details as to which country she's headed out to, because there's a lot of speculation around that. But yes, that's the latest that we are tracking. So a lot happening as far as the global geopolitical situation is concerned. Of course, from Iran and Iraq as well, we have been getting a lot of updates with respect to what's happening to the Western Asia kind of territory as well. But for now, it's last 1 minute to the trading session. So let's look back at our own markets, and it's not been a bad day. And I say that despite seeing a 3% cut on the index is the fact that globally we had seen a much bigger cut. Japan was down a solid 12 to 13%. Kospi was down 10% in the trading session. Asian markets were down over 2%. And of course, European markets too right now are staring at a cut of around 2 to 3%. And in that context, Indian markets have held on okay. There's a cut of 600 points on the Nifty, but at least 24,000 is something that is where we have made the floor for the day today. We did reach that mark, but we quickly came back above that. What's the telling story is the advance decline ratio. So that is clearly favoring the declines right now. A large part of the BSE market capitalization has been eroded in terms of the stock-specific moves that we have seen. Sectorally, no surprise that metals was on the back foot, given the fact most of the global-facing spaces are coming under pressure. So metals was down almost 5%. You also had real estate back coming under pressure. So a Suntech, a Brigade, a Godrej Properties. These were some of your other names down in the red. What held out okay and deserves mention is clearly FMCG. So Marico on account of good earnings. HUL, Dabur, Tata Consumers were the stocks that were in the green. But that's how we are wrapping up Monday morning. It was a freaky Monday to say at the least. Let's see what Tuesday brings for us, because for now the futures are pointing to a lot more volatility. Stay tuned to ET Now. We'll keep getting you the updates later in the day as well.